Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is Forex Quick Look at the Aussie versus US dollars. We head into the close for the trading week on this Friday and look forward to next week's trading. What do we do this week? What have we been doing in this currency pair? Where may we be going? What is the bias? What are the risks? So on and so forth is going to be discussed in this video. So let's get started. I'm going to focus on the hourly chart, and if you take a look at the hourly chart, and I'm going to put a box around a large swath of data here. This goes back to beginning of May, as a matter of fact, and in this box is where most of the trading has taken place over this time period. Yes, there was moves outside of the range on the downside right through here, and more recently right through here, and there have been moves onto the upside up here and up here and right here and here and here. So buyers had their shot on a number of different occasions on the top side. Sellers had their shots as well, more so in the early period right here, but more recently as well in trading, well, last week and the beginning of this week, as a matter of fact. So, but overall, this is where the price action has taken place. So what does that price action go from? Well, it goes from a low right here near 0.6579 and a high right here near 0.6689. So that's only about 100 pips from the low to the high. So going back to May 1, the Aussie versus US dollar has been in about 100 pip trading range. Now, in reality, yes, we extended up to 0.6713. In reality, we extended to a low down here near 0.6556. So it doesn't seem that confined. However, really, if we were to look at this market, only about 100 pips, so a trading range with lots of ups and down price action. What does that say to me? Well, it says to me that the market is unsure of which way it wants to go. We tried the upside and failed. We tried the downside and failed. We've spent most of the time in between. It also says to me that at some point the market is going to decide what it wants to do, whether it be a break to the downside or a break to the upside. We're obviously nearer the downside with the price currently trading at 0.6611 right now. The low is at 0.6579. So if we were to go lower going forward, we would have to break through below the 0.6579 level, and then we'd look toward the 100-day moving average. That's this blue line right here at 0.6563, another key technical level. And then the 200-day moving average of 50% retracement down here at 0.6541 and 0.65376. Getting below those levels on a break would increase the bearish bias from a technical perspective. Have traders looking even lower, I would expect on a move below those levels. So that's the downside momentum. By the way, also in play is this 38.2% retracement level. That level, where does it come from? Well, if I take all that stuff off and go back to this low right here back on April 19th and put a Fibonacci up to the high price that we saw here in May, the 38.2 comes in at 0.6579. And note that the low price when the price was moving to the downside here, we broke below that 38.2% retracement right here on two different occasions here. This is actually on Monday's trade, and the momentum failed. So sellers had their shot, but they missed. But it still remains a key level that needs to get to and through, especially in light of this value area that I've outlined here as where the most price action is taking place. So get below that level increases bearish bias. Now, what would tilt the bias more to the upside? And if I were to look at this chart and look at the cluster of moving averages right here, first off, they're about in the middle of this trading range through here of where the value area is. So that would increase, getting above the 50% retracement would increase the bullish bias from that perspective. Also getting above that cluster of moving averages, including the 100-bar moving average on the 4-hour chart, the 200-hour moving average, the 100-hour moving average, and the 200-bar moving average on the 4-hour chart. Getting above all of those moving averages would increase the bullish bias as well. If it's able to do that either today or going forward, then I would expect to see the sellers turn to buyers, the bias to turn more to the upside, and have traders looking back toward our high prices that we have seen over time, including this week where the price broke above the high of the extreme, but failed on that move to the upside. So overall, the buyers and sellers are battling it out. Overall, the bias is more to the downside below those cluster moving averages. However, We do need to get below the 200-day moving, or get below the 38.2% retracement, get below the low of the swing area, and stay below that level to increase the bearish bias. And then we'll look at the moving averages on the downside for further targets. Conversely, break above those moving averages, shifts the bias more to the upside. So that's my detailed look at the Aussie versus US dollar going to the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.